Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this special weekday Motor Trade Radio episode. Today we're delighted to welcome back friend of the pod, Mike Allen. Mike's the managing director of Cambria Private Capital, the startup investment arm of dealer group Cambria Automobiles, which was specially formed to invest in and provide services to automotive startups and scale-ups. Mike will also be a familiar name to many listeners from his time as an industry analyst at Zeus Capital, commenting on car retailing trends. So welcome back to the show, Mike. It's been a while since we last had you on, so plenty to talk about.
Yeah, thanks, guys. I mean, it's great to be back, and thanks for having me. And you're right, the pace of change in the industry has really stepped up in the last year or so too. So there's no shortage of things to unpack and talk about.
We'd have to have you on daily, won't we, to keep up with that, Mike, to be fair.
Exactly.
It's that mad at the minute, but as you say, lots keeping everybody busy, keeping you busy, keeping you a lot to focus on. And I mean, let's get to something more recent, and let's start off with a presentation you recently gave at the RAC Club in London. And in this, you were tracking the correlations between the two biggest purchases that most of us make, one being a house, and then second to that is a car. I mean, what were some of the standout findings and insight that you've thought about that data and what you were talking about?
Yeah, I mean, it was really about joining the dots between how consumers approach these two major decisions emotionally and financially. So there is a clear behavioural link between house buying confidence and car purchasing activity, particularly at the premium end of the market. And I guess what stood out for me was how changes in mortgage availability, savings rates, and even time to sell for properties tends to ripple through into vehicle purchases within 3 to 6 months. And I guess essentially if somebody feels wealthier on paper, and that might be that house prices are rising or their equity position has improved, that confidence can translate into discretionary spending on cars. Now, I've got to credit the source. A lot of the data came from Savills, and in particularly Lucian Cook, who heads the residential research team. And his work's been fantastic in really showing the market in a different perspective to how you and I might look at it in terms of just purely from an automotive perspective. And it was really interesting just showing how mobility choices and property decisions can go hand in hand, particularly around the adoption of EVs. So it gave a really interesting flavour and perspective, because let's face it, there's more EVs coming. So it gives us a good insight into future market trends.
One of the insights that you shared within that presentation, Mike, was the correlation between EV ownership and how it's concentrated in higher value geographical areas. What do you think that actually showed you?
Yeah, I mean, this was really telling when Savills had the data where they can go into kind of postcodes, and what it showed you was EV penetration is far from evenly distributed. So take, for example, £1 million property hotspots. You might see over 100 EVs registered there per 1,000 housing transactions. But then in lower income or denser urban areas where off-street parking is difficult, it drops off dramatically, and that really shouldn't surprise anybody. So it's not about affluence also, it's also about infrastructure. So the presence of a driveway, the ability to install a home charger, access to three-phase power can also be the difference between EV adoption and hesitation and friction around that decision. So they've also looked at home charges. Does that affect property values? And we're not quite at the point where we say having a charger would add 10 grand to your house price, but it does make homes sell faster. And that's particularly when you look at the data with customers from millennials to early Gen Z buyers, where they see EV readiness as a part of modern home checklist. It becomes quite important. So it's quite interesting just to see how these markets can merge at the moment into up-to-date purchasing decisions.
I mean, Mike, staying with EVs, I mean, what's your view on whether the government has done enough to reduce the ZEV mandate burden on OEMs? And I mean, how do you think the new EV registration market will pan out now for the rest of this year?
Right, I'm not going to get political. I'm going to be very objective.
You'll do better than me. Yes.
So how do we say it? I guess the government's latest adjustments, so allowing hybrids until 2035, reducing the per vehicle fines, it shows that they've listened a little bit. It shows a little bit more realism in the market. However, I'd still say there's a structural issue in that the targets are very, very ambitious, and I'm not sure they fully grasped the lag in affordability as well at the moment. So, I mean, there were some OEMs that struggled with the 22% target for 24, and we all know that fleet are doing the heavy lifting at the moment due to salary sacrifice and a bit of ESG alignment as well. So, I'm not sure they fully understand the extent to which the retail segment is under pressure. And then I guess you've also got VED, you've got expensive car supplements as well. They might not be deal breakers in isolation, but they, if you take them all together, it might erode the economic rationale for early adopters that we need at the moment. And then you've got rising insurance premiums, you've got residual value uncertainty in certain segments of the EV market. So then if you put that all together, you can see why the retail customer might be hesitating with that at the moment. And I'm not sure they fully understand that, if I'm being honest. And I guess from an OEM perspective, they've got to really lean into price-based competition, like we've seen with Tesla before as well. So, that might be required to drive retail demand. So with all of these things, it's not one factor in isolation. It's the market dynamics behind it. But in short, have they done enough? Probably not.
I mean, it is interesting because you mentioned there about the VED on the new EVs and the expensive car supplement now being part of that EV buying process. But obviously, you're talking about that affordability.
Yeah.
It plays against that affordability message, doesn't it, in terms of this EV adoption?
Yeah, that's how I look at the market at the moment. I see all of these factors, and then you still see the price of the cars and what consumers have to put into them, what the monthly payments are, other factors around the economy as well, which is competing for consumer spend. It's these targets are are going to be tough, and I think everybody knows that, but it's could they have done a bit more? I think they could, yeah.
Yeah, it's getting that balance right, remain on that trajectory to a net zero marketplace, but doing it in a sustainable and profitable way, because this does play into the profitability, not just for the OEMs, but right through the dealer segment, supply chain, and everything else, doesn't it?
Yeah, exactly that.
But we'll be back after this break with more from Mike on the marketplace.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Mike, at the beginning of the show, we mentioned your role as MD of Cambria Private Capital, a new position you've now held for over 18 months. And I think last time you were on the show, you just started that position. So I wondered if it would be a good opportunity to have a bit of an update on some of the startups you're investing in and working with. And they're all in the automotive sector. Can you tell us about how that work is going and share maybe some of the technologies that have impressed you over the last 18 months?
Yeah, no, sure, sure. So I do tend to keep companies' names confidential, whether
Yeah,
we're investing or advising within the realms of the fund. But I think it has been fascinating in terms of some of the broader themes that we're seeing. Clearly, there's some great technology out there. We're looking at technologies that will support the dealer infrastructure, and we look at companies that can work within the existing assets that we've got in Cambria, whether that's the dealerships within the various brands that we've got, Sogo or Ramp, so that we can really test to see whether this technology is effective and can work with us. So that takes a bit of time, but we are interested in anything to support customer life cycle management, anything
yeah,
to improve the customer journey, anything that can help source used cars is interesting as well. AI is obviously front and center, particularly in lead management, but also after sales retention and personalization as well. There's various, everybody's got their own definition of AI, but for us, it's kind of, does it work with the operators as well? Can it help them with productivity? So you can get some technology where they say, they will they take over, and we just don't see that. It's got to be an enabler of productivity to improve that kind of customer journey. So that's fascinating as well. Anything to do with used car pricing is interesting. That
yeah,
might give an edge in the market. Real-time vehicle health monitoring is interesting as well. I think there's a lot out there, but it's got to work within the infrastructure within operators who remain key to the operation we see in the future, and it's getting that right, which is as ever in this sector, it's a kind of complex kind of formula, but there's a lot of great stuff out there, and obviously you've had car care on, which I think is really exciting and is
sure.
doing great things for their customers at the moment. Anything to support the EV buying journey. So some of the stuff we talked about with from the RAC, bringing in energy management, getting customers EV ready. There's a good platform called Affinity EV out there, which I think could be quite effective as well. Chatbots, battery health care certificates. There's as it's a huge value chain, lots of different touch points and great opportunities for tech that understands the infrastructure to make a difference and create a win-win.
And are there any sort of trends you're seeing in terms of the startups that are coming to you? Because certainly on the podcast, and we do the supplier specials, we've had some startups that have pretty much come out of a university project. So someone's done a university project and then set themselves up as an entrepreneur and spotted an opening in automotive. So are they mainly sort of young entrepreneurs that are coming to you?
No, no, not at all. There are clearly, but
Yeah,
there's some really experienced guys that have had a career and then spotted an opportunity and a
yeah,
problem that they've been itching to solve for for 20, 25 years, and they've had that experience, and they really know the space and the problem that they're trying to solve. So, I mean, we're very age agnostic. That
yeah,
there's clearly younger guys out there who far brighter than me in terms of tech, etc. But they might need a little bit of a hand on the realisms of the market, and they might have great ambition, but as we know, this is a tough market, and they need to understand the pinch points with the dealers at the moment as well. But it's a vast array of people. Really, it's hard to categorize them into one box, and we're pretty agnostic. Does it work? Have we tested it for a reasonable amount of time? And then can we work together?
Sounds like there's a place for us older, more experienced people for a little bit longer yet, Mike.
Yeah, we just need some good ideas, Phil.
Yeah. I mean, Mike, bringing back to, we touched on dealerships earlier in terms of the Zen mandate and some of the things happening, and you mentioned it with things coming on the horizon with these new entrants, and you wrote an opinion piece recently in AM on automotive management this month on how you think dealerships will evolve in the medium term into experience centres as they adapt to changing customer needs, especially with the growth of, obviously, electrification. Do you want to talk us through some of your thoughts on this, and obviously thinking more about the opportunities for dealers to start to adopt these new potential revenue streams?
Yeah, I think the shift is already underway, to be honest, and I see the winners as those that can that see them as kind of long-term customer platforms. So they're not just a one-off transactional showroom. I think that the world's definitely moved on where customers can keep coming back. They don't have to buy a car. That there's a touch point there, whether they want to speak to you about an element of service, or moving from an ICE vehicle to an EV is a big deal, and they might want to visit 3 or 4 times before they make that big decision. But as more of the research and finance is done online, which that's been happening for at least the last decade, I think the physical dealership needs to offer more than the place of just signing the paperwork. So, we see it as a place of creating trust, delivering sensory experiences, and owning that kind of service journey. And you've got to look at whether you like it or not. The EVs are coming. It's driven by kind of regulation. The needs of the customer are going to change, and there must be an opportunity in areas, maybe tyre subscriptions, definitely battery diagnostics, charging solutions, smart maintenance alerts, and we probably should think of it as an embedded automotive service, and trying to, from a business point of view, build recurring revenue into that ownership and those touch points. So I think dealers that crack that and are thinking about that will not only boost their own profitability, but I think they'll deepen the customer loyalty at a time when, let's be honest, brand stickiness is under real threat due to increased levels of competition.
And Mike, within your piece, and certainly in parallel with this conversation, is the rollout of agency, which I think most of us would probably agree has slowed down a little, and as well as the introduction of many new car brands, mostly from China. So, firstly, what's your take on the future of the franchise model in relation to agency?
We are at a turning point, aren't we? The traditional franchise model, which has stood up for the test of time, is being tested on multiple fronts, whether that's kind of margins, model allocation, customer data ship own it, you name it. There's always challenges around that traditional model. I think we'll end up with a hybrid. Some will revisit agency, and maybe we'll go there. Maybe when when the supply dynamics change, some will remain steadfast to franchise. But I think there'll be clearer roles and responsibilities, and whoever controls the customer relationship and the data will be the value center. And I think that's the battleground. But I don't see a kind of it's either one or the other. I think there'll be elements of it. And let's face it, fleet agency's been around for a long time. It's been around in parts. It's been around in various bits of fleet as well. So some of the ideas from that might get embedded into the traditional model, which will change. So as ever, it will be a kind of a hybrid that will optimize, the brand and the dynamic for the brands and the dealers alike. Now, I guess on the Chinese brands, they're not messing around. It's not a slow ramp up. They are coming with really strong product, really attractive pricing, and their go-to-market strategy has been definitely faster than what I expected. They're really, really going for it. And I think that will raise expectations across the board, whether that's on tech, price to value ratio, etc. So, look, as ever for UK dealers, there's a challenge and there's an opportunity. And the job is picking the right entrance, and you've got growth. If you've got the wrong structure, then you risk being a cost center in a flat market. So there's some big decisions to be made, and the Chinese brands are going to have an impact. There's no doubt about that.
And with those new entrant brands, they're not necessarily a challenge to the established franchised order, are they? Because some of them are actually using that to their advantage rather than running the sales themselves. They're slotting into the franchise network.
Yeah, no, exactly. I mean, they've actually endorsed the franchise network, haven't you? They've said that we want this. We know this works. We know this model has been around for over 100 years, and it will allow us to deliver that rapid scale. So it's a big tick in the box for the dealership model, really. So it's going to be exciting, I think, for many of these brands.
Well, it's never a dull moment in the motor trade, is it?
No, definitely not.
Yeah, and I think fascinating. I mean, obviously we're stuck in the middle of all this geopolitical climate at the minute, and the things around tariffs and the economy recovery and everything else. But thinking past all that, and as you say there, Mike, thinking about how that dealership future looks, the emergence of AI and different ways of thinking about how the retailer engages with their customers and how the retailers become more efficient and the automotive sector evolves. So I think, fascinating how you're in the middle of all of that's going on at the minute. And as you say, I think this is a significant time of change, isn't it, for one, the automotive sector, but in particular the UK automotive sector.
We've been saying that for nearly 10 years. Ever since Brexit, where we thought the world would change forever, and look, it's a tough market. Great entrepreneurs, great operators, and they're used to this, and they get on and do it. And I've seen that more firsthand in the last 18 months, just how good some of these operators are and tough. So obviously tariffs, if he sticks with them, can have an impact. It does have the ability to reduce global growth, which we saw some downgrades yesterday, but you've got to get on with it, and there's a big market opportunity. Used car market's huge. There's a lot of exciting brands to come to the UK. You've got to be infused and energetic about this, otherwise you're in the wrong sector.
Long term, it's long term. There might be some short term blips, but it's that long term trajectory and the market shift that's keeping a close eye on. So, I mean, huge thanks, Mike, for coming on. It's been a while since we caught up. I know you're keeping busy at the sharp end of what's happening in the market, and back to that earlier data that you looked at with Savills there. I mean, fascinating in terms of that correlation between that housing market and car purchase marketplace, and certainly something that it sparked our interest. So a huge thank you for coming on and talking us through some of that.
No, it's always a pleasure, guys.
That's all for now. So many thanks for joining us for this special weekday Motor Trade Radio podcast powered by Motors. Thanks once again to Mike for joining us today and sharing his views on what's shaping the automotive retailing landscape. We're back with the week's headlines on Saturday. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.
We'll be right back.